Sanofi-Aventis is getting closer to a deal for Genzyme. People with knowledge of the talks say the two companies are talking about a price of $74 a share plus potential payments tied to Genzyme's Lemtrada drug for multiple sclerosis. Sachin Shah has been assessing the situation ever since the news broke back in July that Sanofi had made an offer for Genzyme. Sachin is an analyst at Capstone Global Markets who studies M&A to determine whether a deal is or isn't likely to be completed. Sachin, at the moment, does it appear as though
Good morning,
it's
Erik.
just
Happy Monday.
Happy Monday to you? Is it just a matter of time?
Yes. It seems like we're on the 11th hour. The deal seems pretty imminent. We should see some kind of announcement between now and Wednesday. Sanofi is going to report results on Wednesday, so anytime between now and Wednesday is likely.
This slightly unusual structure of the deal, $74 a share in cash. The $74 ought to be making people pretty happy. The $3, it's called a contingent value right. Is that enough? I mean, when you're looking at it from an analytical standpoint,
yes,
is that an appropriate structure for this deal? Does that?
It is appropriate, Erik. In the context, it's not clear if it is $3. It seems like the range is between $5 to $6.
It's going to be traded too.
It's going to be traded, correct. And so the likely value for Genzyme shareholders, they can realize. The clients that I talk to on the event-driven side, they want that value to be realized today rather than 12 months, 18 months, 24 months, 36 months. And so, I've been saying the intrinsic value of Genzyme is between $77 to $78. And so that $3 is potentially...
It gets you to 77?
It gets you to 77 where people are happy with, both on the Genzyme side as well as Sanofi side. And this deal, to me, Erik, shows the breadth of the emotional intelligence of both parties, which we haven't seen. So we're not there yet. We're not at the finish line yet. But it shows emotional intelligence of both the companies and their boards of working together without hostile tactics that I've seen in 2010.
Sachin, we know that they were cooking up this contingent value right as recently as a week ago. So why on Friday did this stock close at $73.40? Is there still value here for ARBs?
Yes. That's a great point, Erik, and I appreciate you bringing it up. So the options, the February options, as I said, I believe that the intrinsic value, we could see the stock trading $76, $77, $78 after all the news is disseminated, the specifics of the milestones for the CVR. The option market, just to give a frame of reference, the 75 strike price for February is people are paying approximately 27 cents. So that's expiring in a week or so, and that means that's $75 plus 27 cents. The stock traded at $73.40. So there could be at least $2 or more upside between now and expiration.
Sachin, this very deal was brought up in a conversation I had last week with Ken Moelis, the well-known investment banker, runs his own firm. Now, I want you to listen to a comment that he made because it was directly in relation to the Sanofi-Genzyme discussions.
Okay, perfect.
Everybody always focuses on the buyer and how strong are the buyers in an M&A environment. Like you just said, Steve Schwartzman, usually a buyer. And what I see out there is the sellers are, when we go to boards and talk to the seller boards, and they're seeing a very strong recovery in margins and growth. And I'm not sure that there's a huge desire to sell at these prices.
So there's Ken Moelis saying, capturing really what's going on in the minds of the folks, the directors at Genzyme, and at so many other companies across America. The economy is improving. Our prospects are improving. Why sell, or at least why sell at the price that somebody's prepared to put on the table? So as an ARB analyst, you look forward into 2011. Are we likely to see more contentious discussions like we saw with Sanofi and Genzyme and perhaps more hostile deals?
Definitely hostile deals. More deals. The size of deals should be higher and greater in the size, in the scope. This deal, as I just mentioned, this deal has not been contentious in relation to the other deals that we've seen in 2010. We're waiting for the outcome for Airgas, Air Products. All of these kind of transactions have been hostile in longer period of time. We're going to see more of that. But the point here is we've seen a lot of companies, like Mr. Moelis has said, we've seen a lot of companies on the seller side be a little reluctant. But then at the same time, we've seen a lot of sellers announce strategic alternatives. I am a proponent of companies announcing strategic alternatives to either sell themselves, to make acquisition themselves, to acquire somebody. A share repurchase, I am not really for. I'd rather have a Dutch tender or a special dividend. So these are some of the ways that companies can extract value, and they have to announce those alternatives.
So Sachin Shah saying you have some alternatives other than knuckling under to the offer. Sachin,
yes,
thanks very much for joining us. Sachin Shah of Capstone Global Markets on Sanofi-Aventis and M&A in 2011.